YouTube, Louie here, and welcome to the weekend. Everything is going in the direction that I predicted, and this video is going to be about what my personal plan is to try to turn $75,000 into $750,000 as a result of the market actions that I think are coming ahead of us. If you're interested in something like that and understand it's not financial advice, it is just my considered opinion after 10 years of following markets and wanting to capitalize on them. This is my plan. See what you think. Right now, I have $75,000 in a Roth IRA. All right, I've been recommending Roths to you for a while. I think it is kind of the secret weapon of people that want to avoid and diminish the taxes they'll be paying at a later date. You might imagine that the tax rates will be higher in the future. They could be much higher. Taxes on precious metals gains can be even higher still with capital gains. Well, I have managed to put away $75,000 into my Roth IRA, and I was able to do this by virtue of my company 401k. So you may not know this, but companies have the option to offer a Roth 401k right alongside a traditional 401k. And if your company does not do that, your company is not looking out for you. Your company is taking the easy road. Financial advisors will typically not recommend a Roth. And I believe the reason is that their fees are diminished when they do so because you pay taxes up front, and what do they get? They get less money to manage, and they get lower fees, lower commissions as a result. That's just my opinion after watching the pension market for quite some time and being somewhat involved in it. But do not believe them. A Roth IRA can be to your benefit whether you're 25, which I would highly recommend you get into it, or you're 65. And of course, to contribute to a Roth individually, outside of a company, well, that is income limited. So if your income is higher, you definitely want to consider and advocate for a Roth IRA for a Roth 401k within your company, because any income level can contribute into a Roth in that way. And that is how I put together $75,000. Of course, at my age, at 64, I was able to transfer that into an individual IRA. And here it sits in a 3-month treasury. I don't know, this is earning like 3% or something like that. But anyway, $75,000. Here is the plan to turn $75,000 into $750,000 tax-free. Okay, so anything you do within your Roth, to the best of my knowledge, the money that comes out of it can be taken at any time, and there are no taxes. Okay, let's keep going if you're interested. Of course, you could try this with $700. You could try this with $7,000. You could try this with $7 million if you have that much in your IRA. But here is my plan. Let's take a look at some charts. This video is going to be about precious metals miners in the face of a coming crash. And I'm going to have to call up the Dow here. Just 1 second. I got to pause. All right, here is the DIA. That is the ETF for the Dow. I couldn't get a long-term Dow chart that I could work with. What I have here is a 22-year, basically a Dow chart. All right, from everything that I've seen and everything that I believe, I think markets will continue to head lower. I've been saying that forever. And here we are in the breakdown phase for the next 25% of the move, in my opinion. And a lot of people agree, a lot of people don't agree, a lot of people just leave their money and hope that over time it'll all work out. And that has worked. Yeah, but I don't plan to lose half my money. Matter of fact, I still have all my retirement account, and I'm waiting for opportunities. So, my considered opinion, and after watching a lot of experts and looking at a lot of predictions, I believe that the crash that we're in right now, and you can see it over here, from the peak to where we are, note how far we could potentially fall. I think the crash that we're in right now is going to resemble 2008. All right, that was the great real estate crisis, the loan crisis, and so forth. I think that's if we're lucky, actually. But I do think the governments will do everything within their power to keep the wheels on the bus. And we may not have the Great Reset. We may not have Mad Max. We may not have World War III. We may not have a reset and 10 for 1 reverse split on the dollar. This is that plan. For those of you that don't believe in Armageddon, that think that this could all somehow work its way through, well, that's what this plan is for that $75,000. Okay, so if you're with me and you think that although the market is down 25% so far, it has another 25% to go, or something like that, and I think it could be kind of capitulatory, or it could drag over 3 to 6 months. I don't really know. I do think that we'll have negative GDP prints for, 2 3 quarters here. And this has nothing to do with the Fed pivot. The Fed could pivot tomorrow, and we could go up 2,000 points. And history shows that we would likely turn around and continue to fall and make lower lows after that happen, because the Fed pivot cannot reverse a recession. It can start to assist it. It can start to stimulate it, but once the eggs are broken, you pretty much got to let the system work its way through. So this is not a Fed pivot video. This is not a everything's going to be fine in the short term video. This is a everything's going to get worse, and we're going to see people lose half their money. That is what happened in 2008. I was a victim to that to some extent because I had a big expensive house, and I watched that house diminish in value by 50%. Okay, don't think it can't happen. And I was a conservative investor back then and did not lose half my 401k. But first you lose your 401k, then you lose your job, and then you lose your house. And that's what's coming for a lot of Americans, in my opinion. So feel free to watch all the videos out there, the prognosticators, the gloom and doomers. But they make a lot of sense, and a lot of people agree with them that the crash has only gotten halfway started. Okay, so and that's what happens is nobody tells their clients to get out when they see the market has topped. They tell them to stay in. And then after the market is halfway down, they tell them, well, it's too late now. And then when people lose the other half of their money, they sell. Right? They're like, they fire their financial advisor, they sell, and that creates the rocket ship back up. So let's assume that something like that is going to happen. You have to bear with me on that assumption. 2008 level crash. Now let's take a look at gold. Just 1 second. Where the heck is I made this too big. 1 second. Gold. GLD. All right, and this is all in the paper market. You may say that within the paper market, none of this, nobody's ever going to pay off on anything, but I'm going to be getting to the mining stocks here in a minute. I'm using gold, and we're just going to take a look back at what happened in 2008. All right, so let me get a little bigger on that. Okay, this is GLD, but you can see that when the crash happened, within a short while, gold plummeted. So here it went from a high of 100 on the GLD down to a low of 71. So nearly a 30% collapse in the price of gold. That is what I think is unfolding right now. Although we are in my buy zone, so as I've been saying for some time, my buy zone is 1650 to 1550, but it could go lower. Okay, but I think buying between 1650 and 1550, the floor is so close that if you can get good deals, I personally will be buying there. But I do expect the bottom to fall out, and I do expect something in the neighborhood of a 30% decline. Okay, now let's see if we can overlay the gold miners. And GDX are the major gold miners, and I'm adding that to the chart. Okay, so this is the plan. Now we got to stay in 2008. Don't get too lost in the appreciation. I know gold can do that. This is why you hold the physical gold. But I'm talking about a paper trade based on miners. So what happened here with miners is that when gold capitulated, you know what? I got to go right to a pure GDX chart. Just give me 1 second here. And hang with me, okay? It might be worth it, or it might at least be entertaining. GDX. This is the major gold miners. I'm not trying to pick. I'm not good enough to do that. I don't have the skill, and there are a lot of charlatans out there, so I'm not in that game of picking the best senior or junior gold miners. For those of you that don't want to work too hard at that, you could pick the royalty companies. They usually do pretty darn well. But here is the capitulation in GDX from a high of 57 down to a low of 15? 15. Okay, this is where the miners are heading as well. I still own a small array of silver and gold miners, but honestly, it's been water torture watching them fall off. And the plan would be when we get the capitulation in the stock market and we get the capitulation in gold, we watch the GDX. Okay, and the GDX, if you use this example, went from 16 and within 2 years was at 52. That's a triple, okay? And you could certainly play that, and maybe I will, but that is not what I'm going to play. What I'm going to play are the silver miners. So let's go ahead and go back to SIL, which is an ETF of major silver miners. And there are not that many pure play silver miners, so I'm sure there are other metals probably contained within this. Let's get rid of the gold miners. Okay, so here we are in the silver miners. We're going to go back to, I can't go to 2008. Doggone it. Let's get out of SIL. I'm sorry. Let me go. SIL would be where I would invest, but let me show you First Majestic, AG, just to get you back to 2008, because that is the period I'm emulating. All right, now you may say that AG's First Majestic is not a good representation of the silver miners, but I think it probably is. It is probably the premier silver miner, but let's say that First Majestic parallels the SIL, the aggregate silver miner market. And you see the capitulation in 2008. Maybe you don't. You can see that took us down to a low of 67 cents. You could have bought First Majestic for 67 cents in 2000, what is that, 2009? No, 2008. October. Notice it's October. Okay, as I've said before, September, October. Nothing good happens in September, October, and we're not even done yet. But don't think that's all the bad news that's going to come. But if we take a look at First Majestic and we go from 67 cents up to, let's pick the high just for giggles. I know you'd never catch the high, to 26.88. So that is 67 cents to 26.88 within 9, 10, 11. Within 3 years, you have got a 26 bagger. Okay, so if I go back to SIL, and am I in SIL? No, no, I didn't want to do that. Hold on. SIL. This index was only created a decade or so ago. And we want to go max. Okay, so I think, as you can see here, from 2010, after that big move, it continued to move, and it went from 20. No, it went from 41 to 85. So there is a double, but the big move was back here 2008 to 2010. So I'm going to argue that if we have capitulation in gold in the stock market, which continues, and in gold and silver, which I know is counterintuitive, but this is what happens because there's a liquidity drain and people sell everything in US dollars. Okay, if you're in another country, it is an entirely different dynamic. You're seeing gold and silver, go up, right? We're seeing it go down. This has to do with the dollar and other currency relationship as the dollar gets stronger and stronger. But for the United States, if we take, let me go, let's see. If we take that $75,000 and we assume that we're going to get, what do you think, guys? I mean, could it be a 60 times return? Would it be reasonable to assume 10x? If we catch the bottom, and we'll probably miss the bottom, right? Nobody catches the bottom and nobody catches the top. But if that happens, you could see $75,000 turn into $750,000. And you know what else you could see in your Roth? Tax free money in your pocket. All right, that is my proposal. That is what I'm doing. I'm continuing to watch, and I'm going to do this, and I'm protecting that Roth money specifically for this purpose of investing in silver miners and potentially gold miners as well. But as far as I'm concerned, if I see the bottom fall out of silver, like it has done so many times, like it has done as recently as a couple of years ago, I'm taking that money and I'm putting it into the SIL. And then you could see that 75,000 could turn into 35,000 if I miss it and it continues to go down. But I believe within the following 2 to 3 years, we'll see that 75,000 turn into $750,000. Unless something really horrible happens and money is not money anymore, and silver mines have been nationalized, and you have barbed wire around your house and you're protecting yourself from the neighbors. That's all possible as well. But this is a everything keeps going scenario. Back to silver and gold price predictions. As I said, gold is square in the buy zone. I wasn't buying, when it was higher, but 1650 to 1550 is my buy zone for physical if you can get good premiums. And silver is not quite in the buy zone yet, but it's like a quarter away from my buy zone of $18 to $15. And you saw it shed $3.50, which is, what is that, 20%? You saw it shed like $3.50 here, or $3, over $3 in the last few weeks. Well, that was paper trading. I won't call it manipulation because everybody in the market thinks silver is going down. It's only stackers that have a dogmatic view that silver can't go down. Well, it's heavily shorted. And I don't know about inventories and all that, but it was pretty clear that was some kind of a short covering rally. Same thing with the 1,000 point moves in the Dow, etc. Pretty clear short covering rally. When you get to the top, all the shorts jump back on and they push it to lower lows. That's what's happening with silver. We could see a little bounce here. Again, that's what fakes you out. Nothing is easy. Could go back to 1950. 18 is a fair amount of resistance for silver, but I think it'll bust. And then we'll be talking about, from 17 to 1775. And then maybe we'll be talking about 1650 to 1725. But I do believe it'll continue to go lower. And there could possibly be, at any time, it could be Monday, there will possibly be a flush. And in that flush is the opportunity in the paper markets. Okay, so you're seeing my paper strategy. If we get a flush in SIL and silver miners, but in the physical market, you got to watch the premiums and you have to stock the product that you want. And just like when the bottom fell out, a few days ago, I was watching those kilos over at Bold. Yes, they raised the premium from $1.80 to $1.90, but it's still there. I imagine it's still there this morning. So I'll continue to try to show you those deals, even more so when we're in my buy zone. Because, there's no guarantee we're going to go under 18, but I'll continue to try to broadcast deals when I see them. They generally will not be on the high premium stuff. That's like driving a Tesla, right? I mean, you want to drive an American Eagle, okay, you go ahead and do that. So you're looking for an $8 premium, instead of a $15 premium. I'm driving, I'm driving a base model here because I don't want to pay those premiums. So I'll be looking at generics and maybe some stuff like, Kooks and Krugerrands and so forth. And on the gold side, I think you already know that I like the lowest premium gold I can find because then I can trade it. But I'll keep watching for that. And gold, again, in my buy zone. And there may be some deals as we speak if you want to buy your physical. But this video was really about my paper strategy for the silver miners, how to make, $700,000 tax-free on $75,000 if we catch this right. There is a purpose to studying these markets. There's an advantage to have been watching these from top to bottom and inside out and consuming thousands of hours of information about all this and the financial markets as well. At some point, you get smarter than the average guy. And at some point, you realize that collapses can be capitalized on. And that is what the smart money is going to do. That's why you see things rocket up after they collapse. When everybody else is selling, the smart money is buying. And this is the plan. Let me know what you think, and I would love to hear your comments on where you think we're headed. Do you think we're headed lower still? Do you think we're going to bounce here and make new highs? Always possible. Fed going to pivot, etc., etc. I think I don't know what breaks first. It could be the Eurozone. It could be American pension plans. And, that would be catastrophic to watch a bailout of American pension plans. But I think as of a couple of months ago, the CalPERS system, which is enormous, was only like 61% funded. And are they leveraging, bonds as well? 7-to-1, I know, on margin. Did they get crushed, or are they now 30% funded? Are American pensions the next crack in the wall? I don't know, but I do think Powell is going to keep going until a tsunami hits him and forces him to stop. He's trying to crack the markets. And he's trying to crack the excessive speculation in the debt markets and reduce the amount of money that's out there. which I think is necessary, actually. All right, guys, that's all I have for you. Sorry for the long video, but this one's out there. Let me know, is Louis out in La La Land, and I've been smoking too much good stuff, or do you think this could actually work? That's all I have for you right now. Have a nice weekend.